So we saw annual inflation falling significantly in Brazil, and yet the central bank did not necessarily cave to political pressure and actually held rates steady. What are we expecting going forward?
That's very interesting. That's actually a reasoning that central bankers themselves had to explain last week to lawmakers in two public hearings that both lasted several hours long. But as we're seeing from today's statements, the reasoning remains the same. Basically, it's about de-anchored long-term inflation expectations. It's about core measures that are still running above their targets. And it's about their own expectations, the central bank's expectations for inflation in the years to come that are also above their goal. So we're seeing today in the statement that they're still using words like they're going to persevere in the inflation battle, they're going to remain vigilant. And they even kept a phrase that has been very much debated, saying that they won't hesitate to resume the tightening cycle if inflation doesn't behave as they expect. Just one minor change from this week's statement is that they are now saying that this is a less likely scenario.
What kind of potential catalysts could surprise against market expectations going forward? What is kind of the bigger picture that we're dealing with? Sherry mentioned the political pressure that, of course, a lot of central banks are facing right now.
Yes, I mean, judging from this statement, I don't see many analysts changing their views right now. Most of them had rate cuts only for later this year, even into the second half of the year. It may tame a little bit the rate curve, but as we are seeing, they are trying to explain better the reasoning to President Luis Ignacio Lula da Silva, to the Workers' Party, trying to justify why interest rates are still at 13.75 when current inflation, is still easing. Just one thing to clarify, we are seeing these easing price pressures right now in Brazil, but most analysts believe it's going to pick up in the months to come because it's just, the effect of last year's tax cuts, and those are going to fade away just in the next 2-3 months.
That is a concern right now, right? I mean, we already had Australia resuming rate hikes. We had Malaysia pausing, resuming rate hikes. What are analysts thinking could be the likelihood of this happening, and how long does the central bank need to keep rates this elevated for them to be able to really rein in inflation expectations, which is the issue here?
Yes. Well, I think what central bankers are trying to see is, like we're seeing right now, inflation expectations steady but still really high. And what they want to see is a movement of inflation expectations for 2024, which is now the main time horizon to lower. One thing that was meaningful in today's statement is that they are pointing to the fact that Luis Ignacio Lula da Silva's government just presented a fiscal framework to Congress that is expected to be debated in Congress, and that is a good sign ahead. But they're still saying that there's still not a mechanical relationship between the fact that the government presented this fiscal bill and lower rates, because they still need to see how this law gets debated in Congress, what law actually gets voted and passes, and they mostly need to see inflation expectations falling from the effect of this fiscal bill.